Look at Southwest this morning. Airline reported a mixed quarter, topping estimates, but falling short on revenue. Its 2020 loss of $3 billion does represent the first annual loss in nearly 50 years. Gary Kelly joins us, as he often does on the quarter, Southwest Airlines chairman and CEO. Gary, it's great to have you again. Welcome.
Glad to be back. Thank you all for having us.
I want to get to some of what's happening with airline shares in the capital markets, but just on the recovery and cash burn, we've been hearing from a lot of players that the first half hope might be dimming and turning into a second half hope. Is that turning into your bear case or your base case?
It's just hard to predict, and I think what we want to do is stay healthy. We're running the best airline. Once again, we'll have the best customer service record. We are outperforming financially. We've got the strongest balance sheet, and our people are pumped. They've done a great job surviving 2020 and getting us to this point, and this is going to be a recovery year. Finally, the case counts are starting to ebb, and that's encouraging. January and February seasonally are rough months anyway, in addition to the the COVID case counts coming into the year. So I think we'll wait and see what happens here with March. It's a little too early to call. We're certainly anxious to see how things begin to materialize Memorial Day and beyond, getting into June. And, I think as soon as the case counts start to come down and people regain their confidence, I think there's pent-up demand. And we want to be ready for that. I think the important thing for everyone to know is that we're poised and ready. And we're in a position where we can adjust our flight counts downward if demand is weak, but we're also ready to move up and increase our flight activity if demand starts picking up. The only way for us to get to break even is to generate more customer traffic and more revenues. We can't cut our way to break even. So that's important that we maintain our readiness on that front. And again, I'm very optimistic. We got the vaccines. The vaccination process is underway. A little bit off to a sluggish start, but we're going to get there. And when we do, we're going to be ready and we'll do well.
A lot's been written about Southwest in the past few months about how you've been opportunistic and adding some capacity to markets where you hadn't traditionally been, given how nimble you guys can be. But I guess the question would be, what are you looking for, given how cancellation rates have made booking trends a little more cloudy? When would you be confident enough to start bringing pilots back in, to start adding cycles in a meaningful way?
Well, again, I think it's important to note, talking about our employees, we had no furloughs, we had no pay cuts, the only major airline to be able to pull that off. So we have a lot of people that are temporarily taking time off, and we can recall them very quickly. So we'll look to see what passenger demand does. We'll look to the bookings to see that. The orientation with bookings is relatively short. Usually, outside of a pandemic environment, we would start a month with about half of the bookings that we would expect to ultimately achieve for that month. So it's a very short cycle. And again, we'll just need to be nimble and be ready to respond. We've been adding new markets, which is a different aspect of your question. And there we're tapping into new customers and giving existing customers new opportunities to fly on us. So that's a breadth play as opposed to adding depth in existing markets. Right now there is no depth. We're going to have to see the recovery begin before we get to that point. But the nice thing about Southwest and our route map is it's still in development. We still have opportunities to add new routes, as you've witnessed. And since November of last year, we'll have added a dozen new markets that we've published so far.
Shepard Smith here. Thanks for watching CNBC on YouTube.